take a look at the CPI and how it impacted DXY, GU, EU, gold, Nasdaq, and the US30 moving forward. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, smash that thumbs up video for the YouTube algorithm there as well. Now, if you don't know, now you know. The US CPI just came out, and as a result of that, the stock market was seen plummeting to the downside. Nasdaq still falling over 3,000 points, 4,000 points, you don't know. And the Dow Jones is also down 400 points there as well. And everything is just melting, and the DXY is basically gaining everything back that it had lost. Like, how can you be this strong that if you look here, the couple of weeks, boom, one candle to fill in the entire week. It's like you broke and then boom, you win the lotto and then all your problems are solved. Firstly, we can see a Dow futures drop 400 points after a hot inflation report. We can see here that the forecast was 8.1%, but it came through at 8.3%, still lower than what it was last month, also what it was previously there as well. Now, if you go back to this article over here, it said stock futures dropped Tuesday morning in the August inflation report. Dow Jones down 1.3%, S&P down 1.7%, and the Nasdaq down 2.3% there as well. The Nasdaq surrendered basically all of its gains. You can see here the market's basically wiping out 2 days worth of buyers, moving it to the downside. Again, technical analysis plays out perfectly. Where the previous support got broken, came back to test it as support. Exactly. Continue to read here. August consumer price index showed a higher than expected reading for inflation. Headline inflation rose 0.1% month over month, even with falling gas prices. We know the price of oil has dropped tremendously. Also, there is a negative correlation between the oil and the dollar index. So if the dollar index increases in value, the prices of oil tend to go down. It says the economists surveyed the Dow Jones had been expecting a decline of at least 0.1% for overall inflation, with a rise of 0.3% for core inflation. Well, I guess they did not know what was coming. Now, right over to the FOMC CME Fed Watch tool, and this basically tells us what the overall investor sentiment looks like in terms of when the Fed is about to hike interest rates, which is plainly coming through next week Wednesday. Is it next week Wednesday? Yes, sir. Next week Wednesday. Now we can see here how we've continuously gone from a 50% basis point to a 75%, 0.75% basis point. It's also now noted that there's a 19% chance that the Fed could hike the interest rates by a full basis point there as well. And we can see after the inflation data came out, investors are now speculating that the Feds are more likely to hike interest rates by 0.75%, and we can now obviously see that it's now more likely, and it's been doing that for the entire September. We saw, most recently came through at the 91%. Now we're back at 78% there, and it's now a fact that the Fed is going to become very aggressive with those interest rate hikes there as well. Now, with that being said, the markets are obviously spooked by the fact that the Fed is now going to hike interest rates more aggressively as anticipated, and the reason for that is this is what you get when that happens. Now, if I have to take you back to school, it basically means that if the Feds are likely highly to raise interest rates higher than what is anticipated, which is currently at 0.50 a basis point, but because inflation had increased and not came down lower than more than what the investors saw or the Dow Jones had forecast, as a result of that, they know what's coming. So the stock market is going to continue lower. Nasdaq is going to hit the floor. DXY is going to continue this bullish momentum. Euro USD, GU, like I said, these guys are going to fall, and you can see all these gaps are being filled up that the market had printed, but it doesn't seem like it's stopping. If you're on the 1 hour, you can see there that candle looks more red than the top section of the Mortal Kombat game, but it is what it is, and this is the price you pay at the end of the day as well. The US inflation shows persistent US retail inflation. Okay, and also the biggest thing is they are expecting, obviously, that this does drop there as well, but it's not going to drop anytime soon. But if you look left over here, you can see the market obviously had all of these gaps that it had to fill, and we can expect a pullback before this market tends to fall further. You can see the market had all of these gaps that it created. DXY even has its own gap that it needed to fill over here, and it was just a matter of time before all of this had happened. But now we know that, and if you don't know, this is what's going to happen. The Feds are going to come through next week and hike interest rates with a 0.5, 0.75 basis point. But then the overall market would have corrected itself if it's going to correct. But just hear me out. So the Federal Reserve is going to come through and hike these interest rates. By then, we should have had a correction in the market. And then we're going to see the market plummet, as not the Dow Jones had forecasted, but how I have forecasted there as well. Okay, now let's start with the DXY. Now, just keep this in mind as I go through this. The reason why the stock market's falling is that when the inflation comes through higher or hotter than expected, it is investor sentiment to think that the Feds will now hike interest rates higher to tackle inflation. By doing this, they will encourage consumers to spend less, because why? Hiking interest rates mean that consumers will have less money to spend because more money will go towards debt. And because the inflation came through higher, even with gas prices that went down, you can expect the Fed to go even deeper. And if we get a 0.75% basis point hike, that means consumers will need to spend less. On what? On companies such as companies that is listed on the Nasdaq 100, Apple, Amazon, so they can't spend. So that's why if the Feds come through 0.75% basis point, Dow Jones to the floor, the Nasdaq to the floor, gold to the floor, Euro USD to the floor, GBP USD to the floor, and DXY talking to the moon. There we go. Now let's go to the technical analysis. Start on the monthly time frame. What do we have now? Firstly, we can see once again over here the DXY had obviously now now that we got this important data, the market had broken above the strong level of resistance, came back to test it as support. Like I said in my last breakdown, we can expect the US dollar to continue higher now. In particular, yeah, on the weekly time frame, what do we see? Now, from a weekly perspective, I also say that we can expect the market to pull back to that level. Now, this level over here acted as a level of resistance. Market broke above that, came to test it as support. The market also printed this massive impulse. After an impulse, we got the correction. If you take your Fibonacci from the low to the high, you can see how we got a 0.50% pullback. Now, the move to the upside is going to happen, whether you like it or not. Next up, we do have the daily time frame. Now, on the daily time frame, we can obviously see how how the dollar index had paid the price for all the bullish momentum that it had this week. Obviously, printing some bearish candles there to the downside, but a correction is always needed in the market. The market printed the resistance, broken above that, came to test it as support, gap down to below support, printed an equal low, came back, tested it as resistance, and if resistance does not hold, we can definitely expect a short pullback because the market will also be testing previous support as resistance. Now we can definitely expect the market to continue slightly higher, pull back, and then continue higher there as well. So if you are looking to buy Euro USD, well, guess what? You don't want to do that. Next up, we've got GBP USD. Now, GBP USD is basically holding on to live support. Now, the market had already dropped lower to go and test that previous level of support over there. So that target had been reached. If you drop down on the daily time frame, what do we see? Now, if you remember that I did this breakdown not too long ago, and I've said we can definitely expect the market to continue lower. Now, what we have over here is because we are expecting a bearish momentum, we have the market printed this level of support over here, so we can definitely expect the market to pull slightly back and then from there continue lower. Because why? I'm not sure if the Fed has any plan to temper or bring down inflation ASAP, but that's not going to be the case, and it's not going to happen overnight like my Forex funds charges overnight spreads on a demo account. So next up, we've got Euro USD, similar price action. Euro USD still has room to maneuver to the downside, and we're probably going to target this level over here on the daily time frame. What do we have? Now, from a daily perspective, we can see how the market had printed this W formation. After a W formation, you expect to pull back to the neckline before that continuation to the upside. Would it make it then a bullish pattern from a technical perspective? But because with the bias is bearish on the Nasdaq, we definitely expect the market, on the Euro USD, we expect the market to break below the neckline, come back to retest it, and then continue to the downside there as well. Market printed a strong level of resistance, broken above resistance, came to test it as support, and as we can see, support's not holding too well there as well. Non-support gets broken, it becomes resistance. You can definitely expect Euro USD to continue slightly lower, and then from there continue this move to the downside. In doing so, with the market then also print this head and shoulders pattern, which is considered a bearish pattern from a technical perspective. Next up, we've got gold, which could potentially be breaking out of this monthly consolidation phase that it had been stuck in. Now we could potentially see the market go and target these levels there as well. Now from a weekly time frame, what do we have? Now from a weekly perspective, we can see gold is back to test a strong level of support that it had been testing for over 4 weeks. We basically need a clear break below that for the market to continue lower. So we are going to, in the long term, target these lows in the market over here as well. On the daily time frame, what do we see? Now from a daily perspective, it's clear that the market had been moving sideways over here. But I can see how the market had been stuck within this consolidation phase. Now the best way to approach this, for the market to break below this level of support, come back, test it as resistance, and expect the market to continue lower to go and test that monthly support there as well. Next up, we've got the Nasdaq 100. Now the Nasdaq 100 at the moment is expected to continue the bearish momentum on the monthly time frame. We know that the market is also stuck in a short consolidation phase where we expect the market to continue lower than that previous level of support over there as well. Next up on the weekly time frame, what do we see? Now from a weekly perspective, the market printed this massive impulse, a correction. If you take your Fibonacci from the high to the low, you can see we had a 50% pullback. And not only did we have a 50% pullback, but we also had this level of resistance that the market broke above that, came to test it as support, broke below support, then came back to test it as resistance there as well. Now what we are waiting to see on the daily time frame is quite simple. Now we can see how the market is currently breaking below the strong level of structural level in the market over here. This level over here acted as a resistance twice. The market broke above that, came to test it as support did not hold. Now the best way to approach this is obviously to wait for a slight pullback, and then from there expect a continuation to the downside for the market to go and test that previous level of support as we identified from a consolidation perspective on the monthly time frame. Next up, we do have US 30. Similar price action is expected over here. We also have this consolidation phase on the monthly time frame. So we expect the market to continue lower to go and test this previous level of support that it had created in the past there as well. Now, from the daily time frame, we can obviously see in how the market is currently breaking below this very strong structural level over here. This level over here acted as a level of resistance. Market tested at a support, break below support, came back, break above that resistance. Support did not hold, and we can see how the market is currently breaking below that level. So we expect the market to pull back to go and test that previous level of support that is now turned resistance, and from there definitely expect the market to continue lower as we expect the Feds to come through and hike the interest rates quite aggressively. Thank you for your time, and as always, cheers for ears.